Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders and moving their positions. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which has just rejected to the upside a quite strong historical structure level for this market. This zone, in fact, was already acting as previous resistance starting from here, from which all these previous rejections to the downside were created. And then with this impulse to the upside, the market broke back above that zone. And at that point, all that previous resistance was turned support here. So the level that the market is currently testing and rejecting to the upside is previous historical resistance, which after the market broke it to the upside was turned support. The market tested it, respected it as support, and rejected it to the upside. So from a monthly perspective, everything seems quite bullish, and we could expect more potential bullish continuation to be created here from a monthly standpoint. At the same time, however, we must identify the current trend of the market, which, being bullish, is composed by higher highs and higher lows. In fact, when you have a bullish market, you're supposed to get the creation of higher highs and higher lows. Now, in this specific situation, what we can notice, however, is that we just had the creation of a higher high, higher low, a new higher high. So the next logical step would be first to see a correction and then a continuation to the upside. So first, the creation of yet another higher low, so higher than the previous one, and then a new higher high, so higher than the previous one. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation seems quite clear as well. We had a market which had created this weekly range. We had the top of the range here. We had the bottom of the range here. And what we said in the previous analysis is that until the market will remain in between these two levels of resistance and support, we could simply expect more horizontal price action unless the market broke back above or back below this range. Now, in this specific case, what actually just happened is that the market broke back above this range. In fact, with this green candle here, we can see how the market now closed above the range. So all this previous resistance is now turned support here. And in a situation like this, more bullish price action definitely seems possible because essentially this is a break and retest of the top of the range. And the top of the range before it was broken to the upside was acting as resistance. Then after the break above is supposed to be acting as support. So currently the market is testing this level as support, from which there is the possibility of seeing more potential bullish price action being developed. Now, let's keep also this in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is quite clear. I did speak about gold just a few days ago when the market was creating this correction. It was around here. I explained all the reasons for which we could expect this rejection to the upside away from this area, which was a very important zone for quite few reasons, which you find in that previous analysis. In fact, I will link it in the description so you can go and check it out for more free education. But At the moment, what do we have? Well, from a daily standpoint, we have to identify, first of all, the pattern that the market has been creating. And what we can notice is that we have a clear impulse followed by a correction. And in general, as I said many times, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, what we can notice is that we have the 50% and 0.618 Fibonacci retracements lining up perfectly with this previous resistance turn support, therefore creating confluence of support in this area. And what is a confluence of support area? Well, confluence of support is when you have multiple layers of support lining up in the same level of price, and that increases the probabilities that we could see institutional longing inside of this zone. Speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing. Now, if we look at the data for gold, what we can notice is that in the long run, we had a massive increase of the net positioning. Institutions went from having a 131.1K net positioning all the way up to now having a 246.6K net positioning with 313,000 longs compared to only 66,000 shorts from an institutional perspective on gold. So institutions are still, in the long run, massively positioned to the bullish side for gold. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. Well, from a daily perspective, as we were saying, this is a confluence of support area. There is a good probability that inside of this zone, we could see more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. So if inside of here we will continue to see institutional longing, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me.
Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.